George Friedlander is Managing Director and Senior Municipal Strategist at Citi. Welcome back to InBusiness.
Thank you.
So are we mispricing risk in the municipal bond market right now? Have we gotten into a panic?
Risk is being mispriced, but it's not entirely because of a panic. A lot of it is because of the loss of Build America bonds and the fact that the potential demand for tax exemption is so thin, particularly right now with the bond fund seeing outflows. There's a supply-demand imbalance. Yes, there's concern about credit quality, which has added to the outflows, but it's not the primary reason that muni yields have gone higher. The primary reason is this supply-demand imbalance.
So to say that it's a scary headline from a single analyst is overstating it, and to say that it's just a matter of budgets is not fair. You're saying fundamentally,
yeah, there's
a backlog.
There's several things going on, but certainly the outflows from the bond funds, which are being exacerbated by the credit fears, is part of it. I mean, but there's good evidence that what's going on is not just credit fears. AAA issues have gone up in yield almost as much as single A. Identical credits between the Build America bond market and the tax-exempt market. The tax-exempt bond yields have gone up about 100 basis points compared to identical credits in the BAB market, which suggests that what's going on in tax-exempts is a dearth of supply rather than just credit fears.
And you were pointing out states and municipalities are bringing to market 56% less than they did the same time, the same week last year.
Yeah.
So what happens beyond February? Are we going to still see this supply constraint?
No, we expect that supply will start back up in March.
Some normalization in March?
Some normalization, yeah. Supply was so light in January, February, largely because so many issuers rushed to market to get ahead of the end of BABs, and also because we have a tremendous amount of new governors and mayors, and they take time to get their financing plans in place. So we're not surprised that supply is so light, but the test of the market is going to come in March, and I think there'll be more real bargains when the calendar gets significantly heavier, which we expect it to do.
So give me a sense of the conversation that's being had in Washington right now makes clear that this is becoming politicized. In some way, at least on a language basis, there will be some involvement of ideology. How is that going to influence what happens in March?
Not a heck of a lot. I think the idea of giving states access to bankruptcy is a bad idea. And as you indicated, it's ideological more than policy. I think the idea is to get that Congress, those who are in favor of this, want to give states a weapon to use to get more concessions from unions. It's not something which anybody ever expects will be used, but it is something that will create fear. And I talked to economists who even think that it would create fear among foreign buyers of treasuries.